Okay, let's get a move on and let's talk about Minda Corporation. They've seen an increase in their EV revenue contribution. What are the synergies that they are accruing from their recent acquisitions, and whether or not more acquisitions are on the cards? Let me welcome on board Ashok Minda, the Chairman and Group CEO at Minda Corporation, joining in on the show right now. Ashok, hi, good morning. Wish you a very happy new year from all of us here at DT Now, and hope all things are safe with you.
Yes, good morning, Aisa, and I wish you happy New Year's to you and to your all the members.
Okay, thank you so much. Just wondering, Ashok, what is the revenue contribution currently that your business accrues from the EV segment, and how is it that you see it inching up going forward?
See, the strategy for electrification, we started somewhere in 2017 and created our R&D facilities, which is Spark Minda Technical Center. And since then, we have started developing the product for EV segment. And now we have started getting result from the product which we have developed since 2017, and our 95% of our product is having no effect of moving from IC engine to the EV. And the basic our strategy is that we wanted to position ourselves as a one-stop shop for all the EV products to the customer, like DC-DC converter, battery charger, motor controller, controller units, and so on. And hence we acquired also a company stake of 26% in EVQ. And this EV conversion from IC will also help us to premiumization of our legacy product, which is about 4 times from our present product cost range. Say, for example, our key set, which is costing about 500 rupees, which is going to move to 2,500 rupees. The cluster, which is 400 to 500 rupees range, going to be digital and TFT cluster to 2,500. So the kit value per content per vehicle will increase 4 times approximately, from 4,000 to 16,000 per vehicle. And so we will move from about present turnover to 20 crores to 200 crores in next 2-3 years times. And our electrification strategy will also help our OEM to reduce their dependency from China. So this is what is Minda Corporation is going to benefit it, and converting from IC to EV vehicle.
Sure. You know, in particular, Ashok, I want to talk about the strong order wins recently that you had from the likes of Ola Electric, and Bajaj Auto is also now jumping onto the EV bandwagon. Tell us a little bit more about what demand visibility that you have from them, considering you're the right person to ask this question.
See, what I feel is this conversion from ICE to EV will not be in a very fast pace for mainly for passenger vehicle and the HCV heavy commercial vehicle, but definitely in the two-wheeler industries it will move fast. I think this is my perspective overall. By 2025 or by 2030, overall the 20 to 25% of the product mix between 25% will be EV and the rest will be ICE, because of the infrastructure, because of the cost of the vehicle has to come down. And the main contribution will be of the two-wheeler from IC to EV. And there we have positioned very well from almost all the customer, whether it is Bajaj Auto or Revolt or TVS or Ola. And we have recently won the battery charger order from two of the major two-wheeler OEMs, which is a substantial business, which will our startup production will happen in next 1 year time.
But if I look at the big companies and the top three, Hero, Bajaj, TVS, they are still ICE engine companies, which is 95% of the sales in the next 3 years will still come from the traditional ICE engines. So what happens to the old business, old traditional business of yours?
As I mentioned, that it will not wipe off very shortly. It will take a little longer time to convert from IC engine to EV. But definitely in two-wheeler industries, almost all vehicle manufacturing, whether it is Bajaj, TVS, or Hero MotoCorp, they are very well working and very aggressively working to launch their product for to cater this EV segment and to retain their market share as a whole. So it is a journey. It will take time, but every OEMs of two-wheeler OEMs is working very aggressively on that, and hence we are also working with them and developing various products to cater to them and to support them to buy from localized from India instead of China.
Where exactly, to your mind, is the disruption highest? Is it in entry-level bikes? Is it in premium level bikes? I'm just trying to understand that which end of the two-wheeler market is getting disrupted, and where do you see the business opportunity maximum for you?
See, first of all, I think mainly in two-wheeler industry, this is a India population, you know, how youth population in India. I feel the captive requirement is going to increase continuously over a period of time in the longer terms. But definitely for the last 2 years, because of the pandemic and because of the various other reasons, we have seen the degrowth in this segment. But now this is a bottomed up, and I see the growth is definitely going to come in the longer time. And there will be a mix of EV as well as IC engine. And the mix, what I explained you earlier, that will be 20 to 30% as a overall by 2025. And our growth, what I mentioned, is that there is going to be a premiumization, and we feel our growth will be 10% above than the market growth, mainly in this segment, because of the various reasons of premiumization, new product development, exports, aftermarket, and so on.
Sure. Ashok also wanted to understand what happens to exports at this juncture, because exports contributed to a good 17% in the first half of the fiscal for you, and many auto companies are doing really well in the overseas market as well. What visibility do you have to scale up your exports at this juncture?
So first of all, there's a big opportunities. There are some products which is a big potential for us, mainly in castings, wiring harness, and so on. And in the first half, it is affected because of the semiconductor issues. Because in global market, the production has been reduced, and subsequently that affects us because we are supplying to either tier 2 or tier 1. So that affect, but I feel this is a very short term, and by second quarter of next fiscal year, this situation is going to improve, and we feel that our growth in export will be 20 to 25% as a CAGR level. So this is what I feel from the export point of view.
Okay, that's encouraging to hear. The other thing, of course, I wanted to talk about is how the commodity inflation has been hitting you and whether or not you've been able to pass off all the raw material cost pressures onto your consumers.
So the good part, as we are in B2B business, and our commodity price impact is indexed with the OEM. Yes, it is either the terms is condition is the different from different OEMs, but finally we are not going to impact any fluctuation in commodity price, because we are indexed almost with all the product and almost with all the customer. So our impact is not going to happen if that happens. So that is not going to affect any of our result because of our indexing with the customer, whether it is copper, whether it is zinc, or whether it is aluminum, plastics, and so on.
Okay, Ashok, good luck for the year ahead, and I'm sure we'll speak again soon after your Q3 numbers.
Thank you, Aisha. Thank you very much.